All right, we're live. Oh, let's see here. Yeah, I'm a little vain. Okay. Um, Sorry about that. Let's see. So comments will appear here. All right. So hello everyone. Hello, hello. Hey Jim. How you doing? Thanks for coming. So again, hey everybody. Those of you who are not familiar, my name is Stacy, and I'm a personal finance coach as well as an insurance advisor. Due to, I guess, high demand, I've also started doing credit repair and some other things, but those are my two main things. This is a continuation. It is life insurance. Wow. Hey, Latanya. Hey, Jonathan. Hey, Fabra. Hey, guys. Hey, hey, Joella. Wow. Okay. So, hey. All right. So, this is a continuation. Latanya, of last week. This is, September is Life Insurance Awareness Month. And as promised, every Thursday, at different times, because this is a little bit later, and I apologize about that. So we'll try to keep it, rather quick. But every Thursday I'm gonna go live for you guys, and I'm gonna try to pour out as much information as I can. Cause hey Judy, there's just so much that hey Jonathan, that we don't know. There's no classes, and if you don't know, you don't know. But they keep it really, really close kept Thomas to themselves, and I'm here to break that box and tell everybody I can, and whoever you get your policies from, or whoever you have to coach you on your finances or credit repair, anything that I do, go ahead and get it from somebody. Ask questions, inbox me questions, call me for a free consultation. Just find out more and what you can do and what your options are when it comes to shifting your money mindset. That is really, really my passion right now today. All right, so let's see. Today's title is what is a whole life policy? And there's just so much more to it than just insurance. Last week we talked about term policy. So those of you who are new, hey Lisa, those of you who are new, go ahead and catch last week's video. It was at 7:30, and it talked about term, the pros, the cons, the benefits, the common uses for them is usually on a bit financial level, as far as if you only have moderate income, or it could be for business purposes. Hey Laura. Hey Joy. All right, I'm so glad you guys are here. I'm so glad that I learned how to read these comments, and because you can slide them on or slide them off, and I can see them, and I can communicate with you guys, and that makes the video so much better. So I'm glad I am learning and getting better. We are growing together. And I feel much more confident today as well. So let's go. Let's do this. All right. So like I said, I did the recap or whatever. And now I'm going to explain to you why that video was so long. Those of you who did watch the video last week, it was a little longer than I wanted it to. It was kind of slow in the beginning. Not a lot of people came on, which is why this week I decided to send out that little 30-minute prior to gentle reminder, because as the video was like rounding out and getting to the end, I saw new people coming on, so I wanted to repeat. Hey Diane. Hey Diane. I wanted to repeat some of the things I said, not thinking that even when the video ends, they can go back and watch the replay. I guess I just got excited and I wanted to continue to pour information. So those of you who watch it from the beginning to the end, I do apologize about all the redundancies and repetitiveness. I'll make sure I give a small recap at the end of each video, but not go into as much depth as I did then. That might have been a little annoying for some. I asked my son to critique it for me. All right, so that's that. Now, today, the new information that I'm sharing with you today, again, it's about whole life and so much more. Okay, so that's moving. Let's stop that. So, whole life is so much more than just insurance. I'm actually going to primarily talk about whole life in general, traditional whole life, and universal life. There's another really good permanent policy. These are all permanent policies. Unlike term, they go until you die, or they go, because we're all living longer, to age 120. Hi, Jim. And so, yeah, age 120. And there's another policy that I would not be talking about because not many people use it, but it's a very good policy, so don't get me wrong. It's an indexed universal life, and that would require me to go into a lot of detail, and I want to make sure I be conscious of my audience. There's different people here who don't know about the benefits of insurance, and some on the other end of the spectrum who may even have an indexed universal life policy now who would know more, and I don't want to lose any of my audience. So if you want to know more about the index universal life, which is whole life policy, you're covered to the end of to the day you die. Your premiums do not increase. You do have money that you can take from. It's like a cash account. and it's growing significantly better than a whole life or a universal life because it's actually in a volatile stock market. So there's some ebb and flow and some ceilings, and how much you can gain is significantly more, but your risk is higher. So if you want to know more about that, go ahead and inbox me or set up a free consultation. I can tell you more. However, today we're just going to stick with the two main permanent policies, which is traditional whole life as well as universal life. All right, so let's see. First is whole life. There's three main points about whole life that I wanted to focus on. One is, first of all, it builds a cash account. If you want to take money out, hey Cynthia, if you want to take money out of your traditional whole life policy, you're considered to be borrowing it from your death benefit. Hey, Pat, you're considered to be borrowing it from your death benefit. So you have to pay it back, and you'll be paying it back with interest. So this is my insurance policy, and you're telling me that I have a cash account on the side that I can use and I can borrow that money from. And that's a big benefit of having a whole life versus a term. But if I borrow it, that means I have to pay it back plus interest. It's my money, and that was supposed to be a benefit. So that's one of the cons of having it. Yeah, thank you. I'm glad I'm giving great info. I like the feedback, guys. So if you have comments or questions, let me know so I know which direction to go in. I do have a little outline here, but I definitely want to give you what you're wanting to know. So let me know if you need me to repeat or go in any direction that you have in mind. So yes, benefit of a whole life is the cash value, but if I borrow it, I have to pay it back before I die, plus interest, or the insurance company will subtract that money that you took off from your death benefit, plus the interest as well. And so your beneficiary will get whatever's left, and so that's a little bit of a secret that's not told to many. It's considered borrowing against your death benefit, not actually withdrawing your money. Let's see. Yeah, so those are three things. Cash value. Also another thing, if you die, hey Aaron. But anyway, another thing with the whole life and which is a permanent policy, the cash value, if you borrow from it, like I said, you got to pay it back plus interest, or they subtract it from your death benefit. But if you, don't borrow from it and you just continue to let it accumulate because you're like, I don't want to have to pay myself back plus interest, and then I don't want to have to subtract it from my beneficiaries what they're going to get, they will not give you the cash value that you paid and you were looking forward to all that time. Your beneficiary will get the face value of your policy, and the cash account that you built will go back to the insurance company. They balance it out, and it's a detailed explanation that I can explain to you, personally at another time. But yeah, you won't get the cash value and the whole life policy. They don't tell you that. You have to either know someone who's been through it, be an insurance agent, read up on it on your own, or know someone to tell you, or it's just not readily available unless you know the right questions, But if you don't know, you don't know, and you don't know what to ask. All right, so now the second permanent policy that I really wanted to focus on is called a universal life. This policy is fairly new. It hasn't been available as long as a whole life policy, but it has some really good benefits. So with the universal life, you do still have a cash account. You're paying your premium. Say it's $50 a month to insure you. You actually have the ability to overfund it, which means I could be paying $50 for myself, but if I choose to, for the extra benefits, I pay $100 a month. And then that $50 that's extra outside of your premium amount is what is going to help build your cash value. And it's building at roughly a 3.5% interest rate, which is much better than any bank, any CD, any savings account. It's outgrowing inflation, and I'll talk about inflation in much more detail in another video. Right now, this is Life Insurance Awareness Month, so I'm sticking to life insurance. But whatever you have, whatever vehicle you have saving your money, if it's not growing at least 3.5% interest on an annual basis, and you're losing money, essentially. Your money today, hey Gina, how you doing? Thanks for joining. Your money today will be less than what it will be valued, less than what it will be in several years. So you're losing your money. You might as well just be, every once in a while, throw a little bit in the garbage. Because inflation will continue to grow and your money is growing, but it's only skipping along. Inflation is hopping and jumping along. That's silly, but still, so universal life. What I really like about it is, the money that you take out, you don't have to pay it back. it's not borrowing it. You're withdrawing money from your cash account that you have built up with your, smart money decisions. I decided to put this in here because I like the interest rates. Hey, Pamela, I like the interest rate. So this is the vehicle that I'm using to save, and I don't want to be penalized for it later on. Otherwise, it's just not as a good vehicle as I thought. So yes, you can withdraw your money, and as long as you keep it in there for 10 years, there's no penalty. You just have to have the money in it for 10 years and there's no penalty. If you do want to take it out prior to that, there's a penalty, but the penalty decreases each year the closer you get to 10 years. So the money is, available to you if you have some type of emergency. However, I would advise if you do get the whole life policy, the permanent policy, there's a universal life policy. You leave the money in there, you overfund it as much as you possibly can for 10 years, and then in 10 years, you can withdraw, like I said, not borrow that money and use it for whatever you like. Use it for down payment on a home. Hey, Eric. Use it to start a business. Use it to pay off debt. Use it to pay for, you want to get married, down payment on a home, marriage, college tuition, whatever it is that you choose to use it for is your money. You don't have to pay it back, and there's no tax penalties, so that's just a really, really great benefit there. If you don't take advantage of it, when you die, your beneficiary will receive the entire face value of your policy, and they will also, hey, Sharice, you talk about a Roth IRA. All right, well, I actually, I do have the ability to provide Roth IRAs. That is more of a financial, you have to have a financial license. But I do have my business partner hey, Sabrina, has the ability to provide a Roth IRA through our agency. I'm actually, we're a broker, so I don't belong to one particular insurance company. Therefore, when I'm speaking to someone, I can find the best policy for their needs as opposed to trying to fit them in a suite of products that one insurance company has. And so providing Roth IRAs is something that we do have. Hey, Rebecca. And let me make a note of that so I make sure that I mention Roth IRA before I hang up. Before I disconnect. Okay, so with the universal life policy, hey, Anthony, where was I at? I was talking about, if you decide to do not borrow from it and you just wanted to accumulate, hey, unlike the traditional whole life policy, upon death, your beneficiary. Oh, okay, that's right. Oh, I forgot to mention everybody. Next week, I'm going to have a guest person to speak on, and it'll actually be somebody who's done a lot of training for me here in the state of Illinois, because if those of you don't know that I've been doing insurance for several years, but in the state of South Carolina. And here in the state of Illinois, the rules and the laws are different, so I've had to connect with somebody to make sure that I stay within the parameters and don't teach anybody anything wrong. And she has a different perspective on a few other things other than just insurance, as far as how we can help you to have an extra stream of income working part-time selling insurance to your friends and family. Her name is Sharice Price. Hey, and she will be tuning in next week, and she'll talk to you more about Roth IRAs and like I said, the second stream of income, and that's on the 21st. And I'm going to say 7:30 as of right now, but that may change. So let's just say the time is to be determined, but I'll definitely put something out like I did for this one so everyone will know. So tune in next week, Sharice and myself, 21st on a Thursday, to talk about second stream of income, Roth IRA. Yay, I like those thumbs ups. Okay, so yes, universal life policy. When you die and you don't take any money out, your beneficiary receives your entire death benefit, and they also receive all of your cash value, and they receive that benefit, no taxes. If you decide to take it out while you're still alive, you receive your money. It's tax free, and you do not have to pay it back. That is so awesome. Let's see here. I talked about the benefit. I talked about the penalty if less than 10 years. I talked about the death benefit plus the cash value. I talked about not paying it back because you're technically borrowing. And that's for universal life. So far, I've talked about whole life, traditional whole life, and a little secrets that people don't know. And I talked about universal life, and a lot of the secrets that people don't know. And I also mentioned, for those of you that just chiming in, hey Tanya, there's another very important permanent policy that has cash value, and it grows. Hey Veronica, but it grows significantly more potentially, but the loss potential is significantly higher as well, and that's called an index universal life. And because that's more detailed, and I wanted to make sure I keep an audit, keep my information leveled and not too detailed for those who may be new to the insurance information. If you want to know more about how you can aggressively deposit money and aggressively gain and earn interest. Hey Trish, hey sis, inbox me and we could talk about index universal life and actually the benefits of it. All right, so let's see here. I'm not gonna give any names. Anybody who want to know, hey Damon, hey Mon, there's I just like to pique your interest. You know, like I said, if it's me that you want a policy from, great. If not, then you have an insurance agent, great. But this should be some benefits. Just like in the last video, I gave you some tips. Also, those of you who didn't watch the last video, go back and watch it. At the end, I gave some really, really great tips regarding term policy. But for this one, a policy that I currently have available, and check with your insurance agent to see if they have available, will give you, it's a universal life policy. Like I said, I'm kind of leaning towards a universal life just because of all the benefits that it has, but that all depends on where you are in your life as well and what kind of money you have available to pay for protection. If term is what you can afford right now, get some protection, because we do not know when we're going to die, especially if you have dependents. Protect yourself now. You can transition over if you can get it changed over to a whole life policy. However, I digress. This policy that I have now, and I'm not going to name any names, if you get this universal life policy, some of the added benefits that is no additional cost, added benefits that are at no additional cost. I'm repeating that on purpose because that is so awesome. If you or your spouse were to die, you have children, your children will receive orphan money on a monthly basis until they turn ain't that the truth? Until they turn 18. $900 a month for your child, per child. If you or your spouse die, that's called the orphan benefit. Ask your insurance agent if they can offer you a policy that offers that absolutely no cost. Hey Chantel, and then let's see, another benefit that this universal life, unnamed because I'm not promoting any particular policy. Hey Denise, like I said, I am we are a brokerage firm, so therefore I have about 30 different companies we work with, and I don't want one to stick out more than the other. A company, I want to know exactly, hey Novella, what your situation is, and then we can go through a few different policies. But this particular unnamed policy, in addition to the orphan benefit, if your child goes to college, they'll receive, is it $8,000? Yes, it's $8,000 per semester, paid directly to the school, of course, but that's fine if you're in college. You know, you don't need the money to go to me because we're doing the right thing today, and we have integrity, and we want to use this benefit for what it's for, and that's for $8,000 scholarship per year for 4 years to pay to the school for your child to go to college. And that's per child, and it's per year, $8,000, and it's no additional charge. So you're covered for insurance. You have the ability to withdraw the money to use for whatever you choose, build a house, get married, more college fund, take a vacation, pay off debt, whatever it is you choose to do, because it's your money and you're withdrawing, not borrowing, and no tax penalties, and no interest, don't have to pay it back. Wonderful policy. But yeah, and on top of that, you get these great benefits as well. In addition, you can get three different riders that I chose to mention today. One is the accelerated death rider. If you have this policy and you're diagnosed to be terminally ill, they'll give you up to 75% of your face value of your policy while you're still alive. That's awesome. And this is with the basic policy. It just comes with it. You don't have to pay more. I mean, really, it's kind of like a no-brainer. But then you get additional monies if you die while you're on a common carrier, meaning if you're driving or flying or on a bus. Not driving. That's personal. Flying on a bus, that's a public carrier. You get additional monies, and then also Oh, I want to mention this one as well. Put an asterisk next to it. Natural disasters. If you or your family had to have some type of have health problems and need to go and have medical attention, and it's due to a natural disaster such as a hurricane, things of that nature, such as the people that are down in the South right now, they will give you money to pay for that. And this is all at no additional charge. But I'm not going to tell you the name of the company. Just ask your insurance agent or call me or, inbox me, because this is just great benefits you should be getting no matter who you're getting it from. All right, so let's see. I went over the universal life policy and my favorite universal life policy and some of the benefits. Let's see here. Some of the other things I was trying to brainstorm, think of some of the different things you could use your money for. You can use it to remodel. You can use it to decorate your home. Last video, I used an analogy and I said having a term policy. Hey, Jamie, having a term policy is like renting and Sharita, hey there, is like renting a home, because the longest you can get a term is usually 35 years. So imagine you rented a home and you love this home and you paid this money to this renter every month on time for 30 years. And then all of a sudden you decided, I can't pay my money anymore. I don't want to pay my money anymore. Guess what? You would have to vacate the premises. That's the equivalent of how I like to describe a term policy. It doesn't really have any benefits. Whole life policy or a permanent policy, because there's different types, you get the benefit of, you get tax write-offs, you get to, not have any neighbors, you get to pay it for a certain amount of time, and then you just pay your taxes, but you don't have to do that. That's, these benefits that I just named are just some of the benefits of having a whole life or permanent policy. I just like to drive that point home. You're investing in your future. You're investing in your finances. You're making smart money decisions, because smart money decisions are made today, but you reap the benefits tomorrow. And tomorrow can mean tomorrow, or it can mean several years down the road. But I'm not trying to push anybody towards any different policy. I just want to, hey, Chris, I just want everybody to understand the difference between term and whole and make your own educated decision. All right, let's see. So I've talked about whole life. I've talked about universal life. I've hinted towards index universal life. So one of the things with whole life is if you're trying to decide, should I go term, or because a lot of people say go term and invest the rest, go term and invest the rest. Well, if you have a time clock on your life, then I guess that would be the right way to go. Or if you only have moderate income, or if it's for business purposes, then yes, term. However, one note about term life or whole life, and as far as the premium goes, is term is more. Whole life or permanent is more on a monthly basis, but over the long term, if you get a term today and then you decide to renew it later, you're going to be paying more for term, because you're going to renew it later at the age that you are, and insurance is more expensive every year that you get older. So I just wanted to point that out. If you look at things in a different way, it'll help you make a decision. Yes, I can get $100,000 worth of term insurance for $20 a month right now, and that's just so awesome. It really, really is awesome if you die in the next 30 years. But if you don't, and now you're 30 years older and you need to get a policy, then you're probably have had some health concerns. Great info. I'm glad you're doing this live. I can go back to it because my children keep interrupting. No worries, Rebecca. You sure can. And I'll continue to do them on a weekly basis for the month of September for insurance specifically. Okay, so so you buy term now, buy it really cheap, it's going to run out because it's not guaranteed to last. And then later on, you're trying to get term, or you might decide to get a whole life at that point, and now you're going to pay based off of your health concerns. Hey, Frank, you're going to pay based off of any medication that you're taking. So actually paying term now and then trying to pay it later on can be more expensive in the long run than whole life or permanent life, however you want to describe it. That was my point there. Just looking at it in a different way, as I stated. Let's see here. Now, this is a tip that I did leave in the last video, and it's worth mentioning again. If you want to get the best of both worlds, but you don't have the ability to purchase a whole life right now, because it is significantly more because of all those benefits. Like I said, purchasing a home, it has so many more benefits than renting. So then you can expect to have to pay the whole light and the gas and, remodeling, or if something breaks down, you can't just call the maintenance gentleman to come out, or maintenance woman, sorry, to come out. You are paying for that, but maybe you can't afford that right now, but you realize the benefit of it. The solution to that is buying a small whole life policy, say 15,000, 10,000, even 5,000. It will have a cash account attached to it. Because this is a small whole life policy that I'm referring to, the cash account won't accumulate as fast because it's a small amount. But you will have something that'll last until you die or until you age 120 years old. It's kind of, but either or, you're completely covered for the remainder of your life. But you may need more insurance than that $5 or $10 or $15,000. So the solution is to purchase a term rider to go in addition to it. So you can get a term rider to say 100 or 200. These are examples, of course, $1,000 in addition to that 5, 10, or 15,000 permanent policy, and then the term life rider will be good for say 30 years. So I have a policy that's going to last me to the end of my life, but I also have a term that's going to be a large amount. So therefore, if my kids or my spouse, if I die and my kids or my spouse still need my income that I was bringing in, and I want to make sure that they're protected and they can maintain that standard of living that they're used to. I'm dead now, so they're mourning. hey, sassy, they're mourning, so we don't want them to have to worry about mourning. And now because my income is now gone immediately, the bill people are still going to want their money. They may let you go, a month or two, but they're still going to want their money. That mortgage still need to be paid. We still want our kids to go to college when that time comes, even though I have since gone. So that's why you need that extra amount of rider, which means an attachment to the policy that you currently have. So the 30-year term will cover that mortgage. It'll cover that if there's some credit issues later on because there was only one income. Most children, when they get out of college, they still need a little bit of financial assistance. So you still have that money available to you to use as you choose. Significantly more than that, that small 5 or 10 or 15 whole life that I talked about. And it'll last for 30 years. It's available to you for 30 years. Now, of course, if you need more than that, then it's this suggestion that I'm giving you good information about the term rider. Yes. Again, if you don't come to me, that is perfectly fine. I'm doing these videos just to inform everybody, whoever your insurance agent is, make sure you ask them the right questions. And if they offer you things, I usually look at it like, don't upsell me. I know what I want. It's already insurance and I feel a certain way about it already. Just listen to what they have to say and ask them these questions. But anyway, yes, small whole life, large term. After the 30 years, you really only need a death benefit anyway, just enough to make sure that your family members are able to put you to rest in a respectable manner. So $10,000-$15,000 is enough, and that term falls off after 30 years. But in the event that you needed it, it was available. Who wants to be moving and uprooting their kids and all of that? And we just lost a very integral part of our family. That term plus a small life is a very good option. Alrighty, so let's see here. So there is I guess you could say a con. A con, pros and cons. There is a con to having a permanent policy. You do have to pay that same amount for the rest of your life every single month. And that could be like, wow, I'm living, but I'm still paying this policy. Like forever, ever. Yeah, I'm silly. So, yes, you do. But there's a way out of that. There are other types of, hey Karen, thank you for joining. There are other types of permanent or whole life policies. They do cost more, but if you only want to pay it for a certain amount of time, but you want to be covered until your death and you want to receive these other benefits, then you have the ability to do so. There's a policy called a paid up early at 10 years, paid up early at 20 years, or you could get a policy no matter how old you are and just say, you know what, figure out how much I need to pay you. I only want to pay you until I'm 65 because that's usually the retirement age. And then after that, I still want to be covered with the whole life or permanent policy and all my extra benefits, but I don't want to continue to pay. My income may decrease significantly if, you don't have a substantial retirement policy or plan in place. So you want to think ahead, but I want to be covered until death. 120 years. So that's an option. Again, it's called a paid up policy. You'll pay a significantly more premium each month, but you'll only have to pay for this permanent policy for say 10 years or 20 years or till age 65. Those are the three ones you have. There's one final one that you can actually have. It's called, it's let's see, what's the name of it? It is a paid up policy, but it's a one lump sum. Oh, single premium. So say you come into a lot of money, and you want to buy insurance because you know it's important, but I don't want to have to worry about this extra bill on a monthly basis, or, who doesn't get tired of paying the same bill forever, 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 ever. So you can actually take a large amount of money and buy some insurance for you that's whole life, and it's paid up. You pay on it no more, but you're covered till age 120. Now, let's look at this at a different perspective. There are some people who already have been paying on a whole life policy for several years, decades even. And they're like, man, I need this benefit, but I'm tired of paying this same bill. I done paid off my house and I'm still paying the same insurance policy. And it may not be a lot because you got it when you were younger, but I'm still paying this same insurance policy. Or like elderly, they've had this policy. Somebody came around, because insurance, you just go door to door. Insurance salesman. They came around and they sold them a policy, and they were smart enough to make that decision, but it's still a monthly responsibility. And like I said, who doesn't want to get rid of as many monthly responsibilities as possible, especially as older in your years? So they can actually review their policy, have someone qualified, trusted insurance agent review their policy. They have a cash value that's built up in that policy. And yes, like I said, if they withdraw their money, they'll have to pay it back. So what you can do to utilize that money, to make sure the full death benefit is paid later on, you can find out exactly how much cash value do I have built up in my whole life policy. Take that money and buy you a single premium policy. Yep. A single premium policy. So I've been paying on this $100,000 life insurance policy for 20 years. And now I have about $25,000, $30,000 worth of cash. And you're telling me that if I borrow it, that's going to be subtracted from my death benefit, and then I got to pay it back with interest. Then what am I supposed to, what's the purpose of it? And then if I die, my beneficiary doesn't get it either. So what's the purpose of it? You know what the purpose of it is? Now that you have this information, you can take that $30,000, buy you a whole life policy, a single premium whole life policy that you will be covered to age 120, and you'll never have to pay on it again. Never have to pay on it again. That's just a beautiful thing. Now make sure, again, I need to repeat, you speak to somebody that you trust, that is educated on it, to make sure that they put you in a policy with a good company that has this extra benefits that I mentioned earlier. You want to have more than just insurance. As you didn't pay it on your loyalty, I want more than just insurance. I want those extra benefits. If I am diagnosed with terminal illness, I want to be able to get that accelerated death benefit. If I die and I'm on a common carrier, I want to be able to get, not me, but my beneficiary, that additional income as well. So ask the right questions. Don't make a knee-jerk decision. Get the information and call somebody that you trust. And if that's me, that's me. That's fine. I'm so available for free consultation for anybody at any time. Well, not to say any time, but for anybody. Hey, Tamika. Hey there. Push out purpose for real. At any time, So, and hey, Aisha, how you doing? So let's see. That was the little second extra tip that I wanted to give. Hey, we are at the end of my information. Anybody who know me know that I like to take notes and, and I like to stay organized. I'm such an overachiever and this, that, and the other. But this is important to me. Will the 30K be the amount of the policy? Well, that depends. You ask them, hey, Tamika, you ask them, what can I do? How much will this amount that I have, how much insurance will this buy? Depending on the insurance company, it'll buy that amount. It might buy a little bit more, and it might buy a little bit less. Depends on, how your money has been growing, how they insure you, and more importantly, it depends on what your current age is, your current health concern, your weight, your height, and any medication that you're on. So yeah, there's definitely some parameters that determines it, but since you're already insured, they can't say no, you can't have a whole life policy. But the value of that policy, there's a lot of different moving parts that determines it. So yeah, no insurance company is the same, and you do have to take in consideration any health concerns that you have, as far as what that cash value will purchase for you. Now, somebody asked me to talk about Roth IRAs, and I've decided to go back and talk about Roth IRAs. All right, so I'm not, let me preface this with, a very important statement. I am not a financial advisor. I do not have a Series 6 or 7 license. I thought about it at one time, but I belong to a brokerage firm, and there are individuals within my agency that are licensed. So if you're wanting a Roth IRA, we can sit down with you and give you some numbers, give you an illustration. Illustration means we'll let you know some specific numbers on how your money will grow over a certain amount of time. So it's not just all in your mind or you have to imagine. You actually get to see specific information because it's guaranteed. So you'll be able to see what the money is. Well, it's not necessarily guaranteed. There's like an idea, but it's more than just saying it could grow at 5 or 6 or it could grow at 7 or 8 or so. Yeah, but I don't want to say it's guaranteed because it is in the stock market. So, but Roth IRA, there's a certain amount that you can deposit into it on an annual basis. It's $5,500 is how much they'll allow you to pay. If you're over retirement age, they'll allow you to an extra $1,000, but $5,000 growing at a certain interest rate is I don't want to speak negatively, and I can't really give you even a significantly or elaborate and educated response. I do know that you do need to speak to a financial advisor. I do know that you can only put in $5,500 a month. I also know that if you try to take the money out of your Roth IRA, which is a very good idea to have, having an emergency savings is a very good idea to have, at least $1,000 a month, and then the next vehicle, a safe vehicle, is a Roth IRA. So don't get me wrong, I'm just not licensed to sell them. It is a great vehicle though, as opposed to just putting the money in the savings, because you will be earning significantly more and you'll outrun the cost of inflation for sure. So don't get me wrong, I'm not speaking negatively about it, but it doesn't come with any benefits, and you don't have access to your money. So you're saving for it, but you're primarily, hey Barbara, hey Lewis, thank you guys for stopping by and visiting me. But if you're not 59 and a half, with that money that's in a Roth IRA, there's a huge penalty that you pay if you try to take the money out, no matter what the problem is, no matter what the emergency is, natural disaster, house on fire, spouse died. You cannot take your money out without 20%, roughly 20% tax penalty, and then you're also going to be penalized just because it's supposed to be a retirement vehicle. So if you're not 59 and a half and you need this money, you're going to be taxed and you're going to be penalized. If you are, then you can take it out. And if you want to save and have that as another vehicle in addition to anything else like a 401k, then that's a great option. Definitely a great option. Much better than a CD. 0.1% or 0.2%. I mean 1% or 1.5% interest is what they're giving. So they're keeping your money and you're losing money, but they're borrowing your money, and then they're going to give it to you in a form of a credit card, and then they're going to charge you 20% to get it back. So, but don't let me get on my rant about credit and banks and institutions such as that. So I hope I answered your question. I don't know if you're still on as far as a Roth IRA. As far as planning for retirement, are there any policies to cover kids? Yes, I have a policy to cover a kid that's roughly $8 or $9 a month. And it accumulates over the years because it's a universal life. So you get imagine if you were able to start saving at 10 years old, and the money that you would have right now in a universal life policy. Reminder, that means all the money that you accumulated, it's yours to take, not borrow. So yeah, getting a universal life policy for a child and then letting it just sit and feeding, that's your college fund. That's your, their retirement fund if they want it. You can take some of it out. You don't even have to take all of it out. As long as it's over 10 years, you can take it out and do whatever you want. Buy the house, get married. That could be their wedding amount or whatever, or buy the ring for their wife or fiance. Yeah, a universal life policy really just has some really great benefits that most policies don't have and we weren't aware of. And we can't see. Hi, I have a watch. Wow, I've been on a video for 41 minutes, guys. I see people still on, so I guess this is great information, and I really want you to know that I appreciate it. Anybody who's watched my videos along the way can see that I have definitely gained my confidence. This is information that I do feel passionate about. excuse me, indigestion. This is information that I really do feel passionate about. I do feel that it is my purpose to pass on as much financial information as I can, so I can help people to have a money mindset shift. We really need to handle our finances more. We need to ask more questions. We need to tell more people, so we can be in a better position, and our children can learn from us so they can be in a better position as well. And this is all coming from the fact that I did not make those decisions correctly. I just failed in a lot of different areas when it came to money. But now that I've pulled myself out of it, and I've helped a few friends and family members and things of that nature, I'm passing on information. Life insurance is one way to prepare for the future. Great job, no fear. That's right. I'm such a dork, y'all, but you know what? I own that. I'm okay with it. I used to not be okay with the fact that I'm a little lame sometimes. I like my lameness, you know, but I do know what comes from the heart reaches the heart. So those of you who are here, stay tuned. Next week, like I said, just in case you didn't hear the first part, Sharice Price, one of my mentors, will be joining me. We'll be doing another video. It will be pertaining to insurance, but a different aspect of insurance, not just about policies, but about, like she said, Roth IRAs, and about how you can sell insurance to your family and your friends, those people that you know don't have it, and you can make anywhere between $1,000 to $3,500 a month, and you don't have to do much at all. There's no time that you have to clock in somewhere. Bye, Eric. Proud of you. Thank you. It's just, you know, I don't want to go into detail. I don't want to steal her thunder. That's for her. I do see that the people are dwindling down, so I'm not going to take up much of your time, guys. I love you guys for watching. Stay tuned. Oh, well, let me give you a sneak peek. The next month is October, right? October, I'm going to change my video dates to Monday, because I'm starting giving out motivating your money tips on Monday. Monday, motivating your money tip. I don't just talk about insurance. My business isn't just about insurance. I want to help people to motivate their money across the board. It's just life insurance awareness month, so I'm sticking to life insurance this month. On that note, you know, I'm not going to take up much of your time unless anybody who's still online has any questions for me, or any comments, or want me to repeat anything. Go ahead and come and join me in my Facebook group. My Facebook group is... Thanks for the information, Stacy. You're awesome. Yay, Tamika. Thank you, girl. It takes one awesome lady to know an awesome lady. Join me in my Facebook group, and it is Motivating Your Money. Hashtag Motivating Your Money. I put it on all of my posts so that anybody can come and they can join. Hey, Rhonda. Hey, we really need to collaborate. But Motivating Your Money is my Facebook group. I'm also on Instagram and LinkedIn and Twitter. Starting to get into Twitter. Not much, but I'm trying to expand reach as many people as I can to learn about, you know, how to shift their money mindset, so we can actually relieve that monthly stress we have with our money. Be prepared for unexpected events, and so we can have for sure. Yay. I did like this. I meant to do like that. But so we can, you know, emergency fund. The purpose of an emergency fund is, we know life is going to happen. Murphy's Law is going to happen. Anything that can go wrong will go wrong. So how about we have money prepared, so when it happens, we don't lose our mind. You know, my car broke down. Oh my God. No, not oh my God. Let me just go ahead and get this money and pay for this car, and I don't have to worry about it. You know, so just different things that I'll be sharing in the month of October. Again, the days that I'll be doing the videos then will change to Monday, because it's going to be Monday Motivating Your Money Tips. There was something else that I wanted to mention, but of course, because I didn't write it down, and you know, my adrenaline is flowing and I'm excited, I forgot, but that's okay. Maybe I'll put it in the comments later on. Really appreciate you guys for sharing, and I mean for sharing your thoughts, for sharing your questions, for giving me the thumbs up and the hearts, and just staying in to the end. Stay tuned till next Thursday, the 21st, roughly 7:30 p.m. If that time changes, I'll let you know on when I'll be doing another video pertaining to life insurance, but a different aspect, how you can have a second stream of income. How are we going to build generational wealth? We're going to build generational wealth by building money. Awesome, great message. By having money come in where I don't have to be there to make that money. You know, that's just what Warren Buffett said. Unless you find a way to make money while you're sleeping, you'll work until the day you die. that scared me. And on that note, guys, I'm going to go ahead and let you go because I'm hungry and I got some pork chops waiting on me. Thanks so much for coming and joining, and leave your comments or your questions. You can visit my group again at Motivating Your Money is the Facebook group. And that's all I have. Thanks so much. Bye, guys. Oh, stay tuned. I'm going to have all kind of freebies and things of that nature, and online classes and stuff like that coming up. I'm putting my content together now. I need to package it, be able to present it to you guys in a respectable and professional manner, and find a reasonable price as well. So stay tuned. That's a little bit down the ways, but I just wanted to drop that and let you guys know any information that I'm saying that you want to know more details about and you want to do it on your own time frame. I will have that available for you. All right, that's it. Bye.